Well, let's go to today's shock news on Holden now. 500 jobs to go in Adelaide and Melbourne, and it's surely news that will refire debate on the viability of the car industry here. I'm joined in the studio by fund manager Roger Montgomery. Roger, welcome.
Thank you, Ticky.
Now, I see the Holden chief, David Devereux, today talking about the devaluation again, currencies today, devaluation of the Japanese yen, and how that's benefiting Japanese manufacturing exporters. And he said, if people don't think that taking a $20,000 car to import it into Australia 5 months ago and now making that car $15,000 to import isn't a form of government assistance, then I think they're out of their minds. He's got a point, hasn't he?
It's a little bit harsh, really. I mean, we've got to feel for the 500 families that are going to be affected by this, but the reality is government policy, long-term government planning and a real lack of it. You can't have it both ways. You can't have high salaries and paying people time and a half on a Saturday and triple time on a Sunday, and then at the same time allow cheap imports and expect to be able to support a local industry. You know, it's impossible to do. Combined, Ford and Holden have turned 160,000 car sales, unit sales, this is the Commodore and the Falcon, in 1996 to 40,000 units last year. And that was their biggest seller. So it's very, very hard to maintain an industry when you've got twin forces of high costs, you've got cheap imports, and you've got declining sales. It's very, very difficult for the business to sustain.
So is this isolated? I should say Mike Devereux. Has Mike Devereux got a specific problem here in Australia, given the currency, or is this a problem globally?
Everyone needs to put this in context. General Motors is a business that went bankrupt in 2009. It then received a $50 billion bailout and was refloated in 2010. For the last 10 years, it's been losing money in Europe. In fact, Angela Merkel is meeting with the CEO of General Motors this week, and there's rumours that there may be a closure of an Opel plant in Germany. So this is a global issue, and the only place that GM seems to be doing reasonably well is a nascent recovery in the United States, and they're pretty strong in China.
So when we see Jay Weatherall, the South Australian Premier, on 7:30 tonight saying this is definitely a broken promise, we are committing supposedly $50 million to Holden. He's talked about a sophisticated agreement he's got about industry transition. But actually, what is going to happen, presumably, is that $50 million will still go to Holden, because Holden's got the government over a barrel in terms of further job losses, surely.
Well, that's true. The government probably feels as though it's being blackmailed, but that's not the reality. The reality is that another politician, Paul Keating, once got it right, I think, when he said always bet on self-interest. You know, and the reality is we're talking about a commercial organisation that's trying to stem losses globally in the billions and billions of dollars. Just back in 2005, the company lost $10.5 billion. It can't keep doing that, and it's incumbent on behalf of its shareholders for the company and its management to actually try and stop the losses and generate profits.
Well, where do you sit on the manufacturing hub argument that the auto industry is such an important part of this? I mean, I understand, I think auto expert Phil Brannigan was saying today that the 100 jobs to go in Melbourne, he believed, were in the engineering sector, very much the jewel in GM's international engineering crown, helping to make overseas models like the Chevy Camaro in the US market. Now, if those sorts of jobs go, also some of the supply side, aren't we losing a big part of our manufacturing hub?
But Ticky, it comes back to planning. You know, you can support an industry, but if you're supporting them and not doing anything else to create incentives for other industries to rise up to replace that industry, then you haven't planned well. And what we're talking about is a government that has systematically reduced Australia, and if I could borrow someone else's term, to a quarry.
So what can we do about it? We could get rid of the luxury car tax?
Well, sure, that'll just make luxury cars even cheaper, and one wonders whether or not the government will now support owners of luxury cars and prevent their aftermarket sales values from declining by maintaining that. But without an industry locally, we probably don't need the luxury car tax. In fact, it's been recommended by several reviewers that we don't need it. It doesn't make any sense.
Well, Roger Montgomery, thank you very much for joining us. We'll follow this with interest this week.
It's a pleasure.